For more on how Powell's testimony could influence the markets, let's bring in RBC Capital Markets head of U.S. equity strategy, Lori Calvasina. Lori, great to have you with us. I know you make it a point that you don't usually make any big Fed predictions here, but I'm wondering if, at least for right now, if you're seeing sort of a sweet spot in terms of being able to trade equities from the long side. It feels like a lot of strategists are saying, you know what, we're gonna trade the markets that are here and now, and right now things look okay. And I'm thinking most specifically about, for instance, Morgan Stanley's Mike Wilson, who's been pretty bearish, but he's saying right now you can trade. What do you think?
Look, I think that, I think we're sort of stuck in purgatory right now, where I think investors are frankly fed up with 2023. A lot of them put those bets on last year. There was some, I think the pause was essentially pre-traded back in January. But I think, investors have their own idea of where earnings growth is going to come in this year. And I think they're ready to look forward to 2024. But I think we quite don't have enough information about 2024 yet for markets to really shift there. So I think we're still sort of being kind of pulled into this 2023 recession, Fed, inflation narrative. Some days we kind of, get a little bit pushed more towards that 2024 recovery. And I think we're stuck a little bit. And I think that's why markets are sort of churning around and chopping right now, frankly.
Lori, it's Karen. So we were talking on the desk before you were on about whether it really matters what the Fed says. Is it other things now that will drive the market? What's your opinion? Is there anything you can say that will really move the market?
As an equity strategist, right, I don't feel like I'm necessarily going to get anything substantially new over the next few days. We'll see. Maybe I'll be surprised. I do think that one of the reasons why in February we started to see the growth trade trade sideways relative to value again after such a strong January was that growth got a little bit expensive and it got a little bit crowded if you look at the CFTC data. So there was room for markets to sort of, price in the idea of, okay, maybe we're a little too optimistic on the pause. We were a little too optimistic on inflation. So I get all that. But I don't know that markets are really going to be hanging on every word. We've had our dose of hawkish Fed speak. I think it's really all about the data from here, to be honest.
Laura, you mentioned some pre-trading of the pause. I don't know if it was December or January that you mentioned. Do you think that with the recent backup that we've had in rates, do you think that the market is finally in line and receiving the message that the Fed has kind of reiterated time and time again?
Look, I don't think the market was ever ignoring the Fed, but I do think that when we came into January, growth looked very reasonable relative to value, and we didn't have a crowding problem in growth. So it was okay for markets to look more forward and say, okay, we already priced in the sort of last chapter of the hawkish Fed. It's okay to go ahead and start pricing in the pause, the transition to something new. But then that trade got ahead of its skis. So we had to ease back on that a little bit. And I sort of appreciated Steve Grasso's commentary in the earlier segment. I'm really, frankly, more interested in what Congress has to say and how heavy they're going to really push the employment side of the mandate over the next couple days, at least in the Senate. To me, that's really going to be interesting to see how much that enters into the discussion and how Powell responds to that.
Lori, always great to get your take. Thank you. Lori Calvasina.
Thanks for having me.
Grasso, you got singled out for making a cogent comment about the employment. But I mean, that's key. That's key, right? I mean, nice. If we're talking about 5+%, that's not politically palatable.
Yeah, and I mean, it just comes down to jobs ultimately, and it's always politically correct to worry about jobs. So we do have a dual mandate with the Fed. The problem is with these long and variable lags, I just really want to know how Chair Powell sees that, and does that dictate his actions? Because if he doesn't, then what is this, as Tim said before, they show up too late, they stay too long, but if everyone knows this is a very cerebral body, what are they going to do to avoid that this time? And I'm starting to hear this argument that earnings are going to be under pressure now because inflation has died down, and that was helping earnings. So it's sort of, this circular argument now. Aren't we hoping for inflation to come down? So I think he's got a real needle to thread in this. He's going to get pushed from both sides of the aisle. I think he's going to stay on message, and I think he's actually done an excellent job as of late sending that message, and the markets liked it.